Exclusive conversation and first ever TV interview, the newly appointed MD and CEO of the bank, Mahesh Kumar Jain, talks to us here at CNBC TV and talks to our very own Lata Venkatesh on the turnaround strategy, the NPA resolution, as well as dealings with downgrades.
You are coming at a time when the bank is in a very difficult situation. What is your turnaround strategy? What was the mandate that you got from the government?
I have been come with a turnaround mandate. I need to turn around the bank. As you rightly put it, the bank is having a high concentration on the corporate sector and the stress sector. Now, in the areas which we are going to focus, we are focusing and we are identifying the areas with regard to the cost reduction, finding out the avenues to improve the revenues in a sustainable and profitable manner.
The more important targets which investors will want to know is on NPA. I mean, obviously you are coming at a time when the NPAs are above 20%, the gross NPAs. So the credit cost as well is very high. What is the goal on both these parameters for the current year?
On addressing the resolution of NPAs and credit, one thing what we have done, we have changed the organizational structure. We have created a dedicated vertical exclusively to deal with the NPAs as well as the flow of the NPAs. So credit monitoring and the NPA, which is headed by one of the best executive director of the bank. So that we have done it, supported by whole team to do the data analytics. The NPA, 78% of the NPL book of the bank is in the consortium. So when it is in the consortium, we cannot push the very hardcore recovery measures. We need to understand the industry, we need to understand the business, and we need to engage with the bankers to find out the resolution either by way of S4A or change of management or SDR and restructuring that will give the scope for upgrading that account. So with that and slippages, we are focusing on credit monitoring, the data analytics, the SMS, the internet. Through that, we are going to start from SMA 0, SMA 1, SMA 2, RFA, early warning signals. So there will be a dedicated focus on preventing the slippages. With these two-way strategies, I am confident that in 17-18, the slippages will be lower than the 16-17. Credit cost also will be lower than the 16-17.
So the more immediate problem is the rating downgrade by ICRA. Now, what does it immediately mean to your bank? Does it mean that your cost of capital increases, your cost of borrowing increases?
The rating agencies are having basically two concerns, and that is the reason they have downgraded our rating, one on the asset quality side and second on the weak capital. Yes. As I explained earlier, on the asset quality side, we are taking a lot of initiatives by improving our underwriting standard, addressing the slippages, and we are taking dedicated efforts for recovery and resolution to the existing NPA. So that will help as far as asset quality is concerned. Capital, as I told, that there will be efforts from the bank side to augment the capital, and there may be a support from the government side also to augment the capital. So these aspects will basically reduce the fear of the rating agencies in next 12 to 18 months' time.
Are you hoping that you will be upgraded back by the rating agencies in a year or 18 months?
I expect and I hope that we should be looked into by the rating agencies in that perspective, but probably they will start their action once they are able to see the results.
Okay, well, that's the guidance coming in from